Hello everyone, it's Ken Wentworth, Mr. Biz from Wentworth Financial Partners, and today I want to talk to you about costing. Costing is something that is critically important for your business, whether you have a product-driven business or even a service business. It's still very important. If you don't get your costing model right, it is going to wreak havoc on your financials. Your budget will be off, your income statement, your balance sheet, inventory, cash flow, and consequently, you're probably going to make some bad decisions because you'll have bad information from what you're making decisions. So let's make sure we get it right. Number one, incorporate all costs. Ken, I know that's obvious, as you're going to tell me, right? Here's 2 tips on how to make sure, because I'm here to tell you that oftentimes things are missing. And I'll get into that in a little bit. But number one, look at the product. So let's say, for example, you produce coffee mugs. Get your coffee mug in front of you, look at it. Flip it around, touch it, feel it. Look at all the different pieces, parts that go into making that coffee mug to make sure you're incorporating all those costs. Number 2 is look at your income statement. Look at all the expense lines and make sure you're capturing those in your costing model. 2 quick examples of things that I have seen missed that are not so obvious. I had one client who had to hold a lot of inventory. There's a cost associated with that. She was not capturing that in her costing model, so she missed that big piece. Another thing I've seen is if you produce things, remakes. So not every coffee mug that you produce is going to be the quality level that you would like to see. So you're going to have to trash those and it becomes spoilage. And so you need to incorporate it into your costing model. It's a cost of doing business. Number 2, refine constantly. When you build it with variable inputs. That way as you're bidding on projects that have different nuances, it's easy to sort of turn on a dime and be able to price those out effectively and accurately. And number 3, in the terrific trio for better costing, do a thorough review annually. I have one absolute tried and true litmus test you can use. When you get to the end of the year and you have your actual financials, calculate what your actual margin was for the year. Compare that to how you price. So for example, if you price all of your jobs out, and I'll simplify things, but at 20%, 20% margin. You get to the end of the year, use your actuals, you calculate your margin, and it's only 5%. Obviously, you have more work to do in your costing model because you're missing a bunch of costs. You should come out at about that 20% mark. You could have a little bit of plus or minus, a little bit of wiggle room there, but it should be very close to the 20%. That's it for the terrific trio for better costing. Thanks for watching, and we'll be in touch again soon.